Hello there everybody, a very good morning to you all and welcome back to another live stream. 2 in a row. Did one yesterday, got one today. Don't normally do that, I normally space them out a little bit more, but the way the week has laid out for me means that we have to do it this way. And we're going to be breaking down the Federal Reserve interest rate decision as promised yesterday. I was in and out of a trade quicker than you could ever imagine, so I can provide an update on my shocking euro dollar trade, which got so close to 1-to-1. But that's the way the cookie crumbles at the end of the day, and it was only 1% risk. So we'll talk a little bit about that. But really, this is a sort of 15-20 minute breakdown of everything Federal Reserve, because if you're a trader today, even if you're someone who maybe you sit out of these days, and that's fine. I still think it's very important that we at least have an understanding of why it's important and what we should be expecting. I know some of you who watch the streams are into their fundamentals more than others, and that's fine. I'm into it, so I will be. Hopefully, that's why people join as well. I'm going to be really breaking down what I expect. I've read some things. I've had a look at the forecasts and projections. I know what's important, and I think I know roughly what he's going to say and what that could mean for markets. Obviously, you're always a little bit in the dark when you go into these events because there's room for surprise, and sometimes the market doesn't always react how you expect it to. But I can give you a good base in terms of what to expect, and maybe that helps you in the current trades that you're in. Maybe that helps you plan future trades. So yeah, let's dive into it. Hello to those on the YouTube channel already. Good to see you, Lara, Dan. Hello to you, and Curtin. I love how obviously you've got the core people that always come and watch, and I really appreciate that. We're actually looking to launch the giveaways from Monday, with the T's and C's now in motion. They're being made up for me, and once they're done, that's it. We're ready to go. And I've been told, it's not a confirmation of this, but I've been told that this will be ready for my Monday stream, which is great. I wonder how many more people will join the streams then. Now they know there's 3 things being given away, probably loads more. So yeah, that's very exciting. So I would recommend that everyone keeps an eye on the Discord channels that you're in, on the social media channels, whether that's my own social media, at Commodities Trading, or the Taurex or Atmos social medias, for updates on the giveaways in hopefully the next few days. Okay. Right. Also, this is a session where people can ask questions, of course, as always. So if anyone has any questions on the Fed today, please drop them in the YouTube chat now, and I will cover those questions for you. Okay? Any questions that you may have, any concerns, anything like that, anything you're not quite sure about when it comes to Fed Day. Okay. Right, well, I'm looking at some of the price action this morning. Obviously, we've got 8 hours. I think, when does it even come out my time? It's normally 7 p.m, right? So for me, that's 10 p.m. So I've still got 12 hours to go. So I must be the earliest person today of analysts who are breaking this down, which is good. So I'm looking at the price action for today. We see a fairly risk-on mood heading into the Federal Reserve. Puts me on edge a little bit, actually. The stock market's up, say, 0.7%. Oil's up 1.6%. Gold is down 1%. But the VIX is up 4.7%, which is surprising. Because those moves don't really make sense. Why are we seeing the stock market higher and the VIX higher and oil higher and gold lower? It's a strange set of moves that we're seeing, which I bet you that's not what it looks like at the end of the day. So at the moment, this for me looks like a good rally to fade, to be honest. I'm actually going to show you a NASDAQ trade that I placed this morning before I came on the stream. It's a little bit of a risk. For me, I wouldn't say it's a bit of fun because I've still risked money. Trading shouldn't be fun, but it should be fun. But I risked like 0.5% on the trade. It's like a little trade. It's what I think is going to happen today. I've done it based off of that. So yeah, so interesting moves to start us off. In terms of my trade ideas and my actual trades The euro dollar trade didn't really work. I probably made a slight error in the stop loss placement. I probably should have given myself like 5 or 10 pips above this high, because you can see actually we're still actually reacting from the neckline of this head and shoulders pattern, right? 4-hour time frame. If you look at this, look at that. In fact, we've had multiple rejections from it. 1, 2, 3, 4, 5, and another one here. So I'm a little bit frustrated, and when I put that down in my journal, I'll probably say that I made a slight error of judgment there, putting my stop loss there. I probably should have accounted for maybe a liquidity grab on that wick, but we didn't really. We actually created equal highs. Anyway, it doesn't matter. What also was annoying was that you can see that I pretty much. Where did I enter? It was here. Good morning, Osama. Always late, shocking. Okay, I didn't get that. I thought it was a bit closer than that. I got to 0.65 to 1. So I never move my stop loss or never change the trade at all unless I get to 1 to 1. So yeah, you're right, Dan. It's a frustrating one, because I'm still like tempted by it here, and what I'm tempted for is to go, okay, let's try again. Give ourselves 10 pips above this high and make it a 25 pip stop loss. Like that. And even if we target it down there, do you know what? Just because of the fact we've still got these like sort of multiple rejections from that neckline. Look at this. Can you see that? I think it's worth the risk for me. So I might do 0.5% on that. Try again, because if that trade does, if I get chopped out again, then it's just simply a 1.5% loss, which normally I'd place 2% on like a 4-hour trade anyway. So I'm actually quite happy with that. Risk calculator. Let's give it a go. I'm actually in the process of building a tool for Taurex clients where you can actually calculate your lot size risk on MetaTrader itself. Should be good. How big was the stop loss for that? For me? Let's call it 25. 1.87 lots. Okay. Where is it? Euro dollar. 1.87 lots. Okay. Let me actually put the stop loss value in there as well. 1.139, 910, let's say, and then 1.1. I'll leave the take profit. Okay. We're in, people. Ow. There we go, a bit of live trading for you. This is a high risk setup, to be honest with you. And I could be out of this in the next hour, but we have had a reaction, and we're in. Maybe I should have waited for this next hourly candle to close. It's 0.5%. It's a small risk for me. So let's see how we get on. It's sort of my last chance on EU, and I'll leave it. I'll leave it alone. Hello, Jessica. Good to see you. Hope you're doing well. Thank you very much for the message. Hope your trading has treated you well. Where is the Discord channel? There it is. Trade ideas. Last chance on EU. 0.5% for me. I put that in the Atmos one. Let's see how we go. Okay, cool. So that's that. And then the other trade update that I've got is on oil. Look at that. We said yesterday about basically where we had this, you remember this gap that was created? See that? From there to there. And then what happened is we come up, broke above the gap, if you go on the hourly time frame, broke above the gap, retested it, and then boom. I was actually quick enough to get into this trade, which is amazing, but it was on a different account. It wasn't actually on my main account, but beautiful, beautiful. And I don't think we've quite reached 1-to-1. .57, so hopefully we can get 1-to-1. I don't really like it fundamentally, but as long as I can get 1-to-1, you know, I can close some profit off. So, and you can actually see we're starting to break above this high as well. So there is some signs here that oil is starting to turn around, but the fundamental picture still remains pretty uncertain. But I think we've priced in a lot of the bad stuff when it comes to markets, like a lot of the currently a lot of the tariff stuff and the potential recession stuff, that's sort of been priced in now, and if we're seeing an unwinding of that in a way, and that can give some fuel to oil. And we've got some, you know, more geopolitical tensions. You know, I think last night we saw India striking Pakistan. I don't know if you saw that news. And obviously the stuff that's happening still in over in the other corners of the globe as well, puts potential some upside potential on oil prices. So yeah, we'll see. Okay, cool. Right, that's that. Let's just talk about the Fed as he closes it down. Today is all about the Fed. There isn't anything else we need to really worry about, okay? Federal funds rate is expected to stay at 4.5%. That's basically no change in the interest rate. Let's first talk about how probable that is. It's pretty much nailed on, okay? So that's one thing that we can sort of like take off of our mind, is that, you know, we're expecting rates to be held at 4.5%. We're not expecting any change in the interest rates. Okay, we've known that for quite some time. If you want to know for sure why that's expected, well, you go onto the CME FedWatch tool, which tells you the probabilities of what the Fed are going to do. And for today's meeting, this is the current interest rate, 4.25 to 4.50 current. See down there. The percentage that is the rate at the end of today's meeting is 95.6%. So there's a 4% chance that they cut rates. So we're pretty much nailed on. Okay, what matters then? Well, we have a press conference and a monetary policy statement. That statement and monetary policy, that statement and the press conference is basically what traders and investors will use to determine what they think for the future meetings, right? So, June's meeting on the 18th of June, which I've clicked on here, currently the markets are expecting a 70% chance, again, that rates are still will be in the range that they are right now, the 4.25 to 4.5%. But there's a 28% chance that rates are going to be cut. So, what does that mean? That means that if Jerome Powell comes out today and is more hawkish, this probability will go down and this probability will go up. In other words, hawkish basically meaning expecting interest rates to be held where they are, no cuts. That theoretically is positive for the US dollar, which is why I quite like maybe trying to get into that euro-dollar trade. Now, if it hasn't already been stopped out, it's a tight stop loss. I forgot what I was saying. And it probably won't be met with much joy from the stock market. So we could probably expect stocks lower off the back of that. And gold lower. And what you'll notice that it will have an impact on the future meetings for the rest of the year as well. But there is still some ambiguity in this one, so this is important. If the Fed come out more dovish, and I will explain what that looks like in a minute. If the Fed come out more dovish, this percentage will go down and this percentage will go up. In other words, the markets will think, oh, maybe there's a cut coming next decision on the 18th of June. What does that mean? Well, theoretically, that's weak for the US dollar and positive for the stock market. The stock market will probably love that, right? They'll probably love that because this isn't like this isn't a. When I spoke before about the fact that if the Fed cuts, stocks might go down, that's only if the Fed has to cut because of a recession. Well, at the moment, we're not there. And how do we know that? Because last week, the NFP report came in at 177k. Previously, that figure was downgraded. The average hourly earnings fell a little bit. Unemployment stayed where it was. But overall, that's not a recessionary jobs labour market. You see what I mean? So that will probably, a cut this time, indicating a cut for next time will probably be seen as very positive for the stock market. Like, it'll probably surge, to be honest. Okay, they're the two scenarios. But what do we actually expect? Well, for me, and I've been reading some stuff here, the US Federal Reserve faces a tough choice amid inflation and job growth signals. Caught between a rock and a hard place, the Federal Reserve is navigating through a mix of signals as it gears up for its upcoming meeting. With inflation as a focal point, the general consensus leans towards maintaining steady rates. We know that. However, the push from President Donald Trump for a rate cut adds a layer of complexity to their decision-making process. This scenario unfolds amidst concerns of a potential economic downturn, making the central bank's next move a subject of intense speculation. This is why I think the power is going to be more hawkish than dovish, is because the tariff stuff is slowly being unwinded and it's not as aggressive as it first was. That's why we've seen the rally in the stock market and the recovery in the stock market, which means that the Jerome Powell doesn't have as much pressure I don't think, from Trump to cut rates as when everything was going crazy and it was all dropping off a cliff and Powell was like, cut rates, I'm going to sack you and all this sort of stuff. That seems to have calmed down a little bit. That's taken the pressure off of Powell's shoulders in terms of signalling cuts. And add that on to the fact that the jobs data was fairly robust. There are economic concerns, there are uncertainties, which I think Powell will probably touch on. But I think overall he will maintain, he'll be able to maintain his more hawkish stance for keeping rates where they were, because it's been a fairly calm few weeks. Here we go. Bloomberg Economics weighs in, suggesting that the Federal Reserve Chair Jerome Powell might emphasise a renewed focus on price stability, countering the market's anticipation of a cut. This stance is supported by the comments from the Fed officials expressing concerns over loosening inflation expectations. We expect Powell to push back against market pricing and signal a renewed priority on price stability. That's suggesting that he may even sort of double down on his hawkish, or less dovish stance. Interesting. And so for me, when I conclude, what's important for everyone to do is not really listen to that, but listen to these two things. The FOMC statement, it is 10 o'clock in the evening for me, so you have to give me a bit of a break. I'll be watching the press conference, probably before I go to bed. And I don't have a stream until Monday, but I will break down, chat about it with you in the Discord channel about what we expect. But I think that statement and the press conference, more than anything, is going to be one of Powell being concerned about a ramp higher in inflation rather than economic concerns, although he will express obviously some uncertainties around the tariff situation. So what does that mean for markets? Well, for the stock market, which is currently up 0.82%, I said about the Nasdaq how it was reaching quite an important level. Basically what we had here was some price imbalance, as you can see. And what I liked about this price imbalance is that when you drop that down onto the hourly time frame, is we actually saw a reaction from it. Lower high, lower low, lower high. Do we get that? Or do we get, obviously, the alternative, which is this? Well, again, for me, this is a very, I literally put 0.25% risk on this trade. I quite like the idea, well, because of what I've said, it's playing a bit of a hawkish view from the Fed and basically saying, let's look at something like this. I can't remember exactly where my entry was, if I'm being honest. Oh, it's literally right where it was now. Literally, I've got to say, like, I'm pretty much break even on it. So right where I am now, I've actually entered a very, very small short position. It's basically just because of that's what I feel was going to happen from the Fed today. And I think that if what I said does happen, I think the reaction will be dollar positive and stock market negative. There is a risk to that, of course, because that might not be the case, and that's the point of trading, right? You have to make a decision, and that is my decision for today. And yeah, I'm happy with the sort of trades that I'm in. I've kept the risk really, really low, and if I do manage to get into profit in the lead up to the event, then I will protect myself quite aggressively because I don't want to like be slipped or anything like that. So yeah, I will. We'll see how it goes today. Does anyone have any questions on that? Hopefully that was a good breakdown of what to expect. I'll just give it sort of some time just in case anyone's got any questions. Okay. It seems like everyone is understanding of my... Oh, look at that. Here we go. There's euro dollar. Like that. I'd like it if that candle closed like that because that would be a nice engulfing candle. I could take a look at dollar yen for sure. Dollar yen, dollar yen, dollar yen. I think dollar yen's a good one to play if you're looking for... By the way, look at that imbalance reaction on the 4 hour. Look at that. There to there. Imbalance. 50%. Boom. For me, dollar yen... Interesting. Reaction from that imbalance, breakdown below that trend line. This looks bearish to me, Lara, if I'm being honest. So that's a good counter trade. Obviously, I've gone euro dollar short, so I'm hoping for dollar strength. However, should we get... Hello, Bobby. Bobby's late today. I'm just about to finish off, Bobby. But you can watch it back on catch up. If we're going to play the dollar weakness play, I like this. Something like that. If we're going to play dollar, if the dollar turns out weak from all of this, that's the trade for me for the next couple of days. Something like that. So yeah, I don't like dollar yen longs too much. I got stopped out of a trend rider long maybe the beginning of this week actually. It's not been the best week for me, to be fair. Yeah, that's what I would say. It looks bearish to me. Okay, Good stuff, everybody. Thank you very much for those who tuned in today. I hope that was a nice breakdown of the Fed. Once you break it down, that's it. Don't overthink things too much, and let it play out. I gave you my prediction. I might be wrong, and we shall see. I sort of have a 60, 70% confidence in what I said, but this is a very uncertain period, uncertain times. There's a lot of uncertainties. So, yeah, if Powell leans the way of being concerned about the uncertainties, then we could argue he's more dovish. So it could go either way, like any news event. That's what we should know. But I'm in my trades, very small risk today, and I'll see how we go with them. If I can maybe get into some profit, I'll look to protect myself as quickly as possible. Okay, thank you very much, everyone. Take care, trade well, and good luck. Cheers.